And while every week can have a huge impact on interest rates, make no mistake about it, this week has huge potential for what is going to be coming at us for the remainder of 2025. What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with the week ahead, diving a little bit deeper into what I think is going to move interest rates this week and giving you the top 3 things that I think are going to have the most potential to move the markets. And number one, it's going to be how hot is it? And what am I talking about, y'all? I'm talking about inflation. Look, we got that jobs report a couple Fridays ago, and it spelled out that, breaks on with the revisions that the labor market is not doing as great as one maybe had thought. And what that did is that pushed interest rates lower. It significantly moved them quickly. But last week, the market had a chance to digest. We saw ISM prices go up, and we saw that inflation, once again, is one of those things that the Fed cannot just turn its back on. And last week, I talked a lot about stagflation. And this week, we have CPI and PPI coming at us. And if we continue to see the ever slight increase that we have been seeing week after week of that 0.1%, expectation forecast is at 0.3 and it comes in at 0.4, whatever the case may be. I'm not exactly sure what it is. I'll bring that up here in a minute. But my point being is if we continue to see that go up, it is such a huge number this week because what it's going to do, it's going to paint the Fed in a box. And what do I mean by that? What I'm saying is if you have a slowing economy, and in a slowing economy and you see a labor market that's potentially sluggish, but no data is coming over the top and saying, hey, red alarms, red alarms. So until we get that, the Fed still is going to pause. But the point I'm making that is if you have that slowing economy and you have inflation, what you then have is a Fed that just has handcuffs. They're not going to be able to do a damn thing. They're remain exactly where they are at because should they decrease the Fed funds rate to spur growth, they could ignite inflation that is already creeping up. And that would be the Fed's worst nightmare with stagflation. My prediction, I actually think we're going to see a slight increase once again in the CPI data and the PPI data, possibly, but definitely the CPI. And what it's going to do, it's going to handcuff the Fed. All expectations right now, there's about an 88% chance that the Fed will cut that interest rate. That's what all the experts are saying. I'm thinking it's more around about 70% right now. I think we're hovering around 70 because if that read comes in slightly higher, I'm here to tell you that come that Jackson Hole symposium, you're going to hear Fed Chairman Powell's comments. They're not going to be dovish. He is going to fear that inflation. He's getting pressure politically. He doesn't give a shit about the political pressure. He's not a fan of this current administration. I think he demonstrated that last year when under no premise whatsoever, no data-driven decision, the Fed came out and did a 0.5 point cut right before the election. So he's no fan of this current administration. And I think that's going to play a lot into it. And I think we don't see a September rate cut. I think that's the main thing I'm pointing out here is the lows that we're seeing right now are some of the lows that we are going to see. And I think if you're sitting on that fence right now and you have to make decisions, I would err on the side of caution. And I would be very, very keen on potentially locking in those interest rates. The second thing that I think is going to play really heavily into the decision potentially is going to be retail sales numbers. And I'm going to bring up this right here. These are the big things that are coming out. So you can see CPI is going to be our first one. We're going to see that on Tuesday. The next one we're going to see is PPI. And, initial jobless claims is in there. I don't think that's going to be a huge market mover. But then we see on Friday, we got core retail sales and we have retail sales. Now, last month, that number came in aggressively higher than what people had thought. So they've scaled it back a little bit. They're still anticipating that it's going to be in a positive. I think that number is going to miss. I think if you're seeing a labor market that is that poor that we saw all these revisions now, I think we're going to start seeing once again, even further evidence that consumer on discretionary spending is pulling back. I think that's going to set off some alarms that we are moving into a slowing economy, but you're having all these good earnings counter it. So I think it's going to kind of offset itself. I don't think it's a big market mover. The big market mover of the week is inflation, but let's assume we get inflation where we want it to be. Let's assume it just comes in at forecast. That's going to be a positive for a potential Fed move. And then if you come on top of that with retail sales that are going to be pulling back on Friday, it could be a great week for interest rates. I think the opposite is going to happen with inflation. I've already said that. I'm not going to go back on that now. However, if that should happen, and I've been wrong before, believe it or not, y'all, I don't like to admit it, but I have been. But if I am wrong, we are going to see rates improve by the end of the week. So that's my number two thing that we really want to watch this week. And the third thing that we're going to be watching is Trump and Putin are meeting on Friday in Alaska. And do I think that the whole escalation with, the geopolitical front with regards to the Ukraine war is going to be a huge market mover? I don't. I think the market's already built it in, that we're in this thing kind of for the long haul. It's moving along. There's no closure in sight. I think what it could do, though, is it could potentially move the fact that, once again, it could be a win for Trump. I think it could be something with regards to oil, and the price of oil could be something where it could come down even further should negotiations actually go well on that front. I don't think they're going to. I think it's going to be a lot of false promises like we see all the time with Putin. I don't think he's going to really I think he's going to not say much. He's going to say what Trump wants to hear, and then he's going to go do whatever the hell he wants anyway. He's going to use those drones. He's going to be bombing. I mean, I don't think a lot comes out of it other than it is an absolutely huge event. However, the other geopolitical event that I think could really move the markets this week, and it's not really being talked about because it's being overshadowed, is we do have the tariff agreement that is the temporary agreement coming up with China. And unless this administration must already have those negotiations in place where they're going to have a stay on that or something, because there's been no real mention of it. And for that to come without any alarms being set off by this administration that, hey, we're going to do X, Y, and Z because we haven't come to an agreement or something like that, I think would already have been said. But make no mistake about it. To me, that carries more weight than the meeting between Trump and Putin. You do have two world leaders meeting, especially between U.S. and Russia. So don't get me wrong in the fact that it's not newsworthy, but I'm here to talk about what's going to move interest rates. And I don't think that's a huge mover, but I do think the upcoming end of the tariff agreement, the temporary agreement with China, could be huge, and the can is kicked down the road. They acknowledge that negotiations are ongoing and they're moving forward in a positive direction. So that's where it sits. My prediction for the week, I think we see rates that are slightly higher. It goes back to the fact that I think that's where we end on Friday is a little bit higher than where we started today. And what we're seeing today is we're seeing a very slight correction because I thought we saw a little bit more of a sell-off than we needed on Friday with no data to move the market and an additional day today to digest that. Inflation numbers are coming tomorrow. So I think you're seeing a slight correction, but it goes back to what I've been saying the whole time for 2025. Look, you have to be ready and you have to be willing to lock those valleys. We saw one when the non-farm payroll came out on Friday. It then came in on Monday and it was great. A week ago, we saw rates moving, been a little bit lower. That was the day to take action. Sitting and waiting with these uncertain times and allowing traders to digest the fact that, hey, inflation could come in here, or the jobs numbers this or that, and you allow people to sit and dissect what they think. Look, inaction and being in quicksand and trying to make decisions in uncertain time, people are going to err on the side of caution. And with the error on the side of caution, it's really not in treasuries at the moment because the fear of inflation, traders aren't, long-term treasuries are not that sexy because you're not guaranteed a huge rate of return. You may even lose money. And then when you have all these companies, all these high-tech companies just exploding and blowing away forecasts, that's where they're going to go make their money. So I hope that helps. I hope you have a great week. If you need anything out there, if you're an agent, you need a quote, you want me to give talk strategy with you with regards to a client, make a referral, I would love that. I'd love to be your person of choice. At least throw my name in the hat, transparency, everything like that. I don't think anybody does it quite better, tooting my own horn. Doot, doot. And secondly, if you're out there and you're a consumer, let's have a conversation. The sooner we have that, the better. I don't care if you're looking to purchase in a year or not. Doesn't really matter to me. I think the most important thing for you is that you start talking to a professional so you understand how this industry works and how to best position yourself to meet your goals. I lend in all 50 states, so please don't hesitate to give me a call. I don't have any restrictions of where I can go, so I'd love to help you wherever you are and with any situation that you may have, whether it be residential or commercial. Once again, my name is Kevin Weemark, aka The Mortgage Mouth. Make sure you hit that subscription button so you never miss a beat when it comes to the week ahead. Every day, I'm also bringing you to the daily dose, very quick 2 minutes of what happened in the marketplace and what we can expect. And of course, on Friday, we do our Friday wrap up. All right, y'all, have a wonderful week. Be blessed. And I'll come to you later today with an episode of the Daily Dose. Cheers.